Welcome to Tradespoon and Yellow Tunnel and Tradier Hub. My name is Lark Carpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to talk about earnings season. We're going to talk about JP Morgan, Wells Fargo announcing earnings tomorrow. We're going to talk about commodities, energy, XLE, silver, gold. We're going to talk about macroeconomic conditions, hotter than expected CPI, a little bit better than expected PPI, and what does it all mean for the market. Everybody, welcome on Tradier Hub. Welcome on Tradespoon and Yellow Tunnel. Fred, Ricardo, John, Fred, sound now is good. Okay, we are back. Okay. Let's see. You can see my screen. You can hear me. Louis, we're all good. All right, so we can share screen. Okay, so this is my brief bio for those of you who are new. I think the difference between Yellow Tunnel and maybe other services that you've seen out there is that my background is technology. I was a CTO of several publicly traded company in fintech space, a lot of broker-dealer experience, building tools, financial tools, the trading tools for retail investors. And we have a team of financial engineers that are building models now for Tradespoon and Yellow Tunnel. And I trade these signals in the live trading room, and that's what you're going to see today. Disclosures are very important. Please read them. I'm going to go through specific trade ideas. So disclosures are important. If you're new to trading stock or options, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, now the disclosures out of the way, let's talk about the market, right? So we had the PPI data today. It came in a little bit better than expected. Core PPI, let's see if you refresh. Does it show you? Yeah, 0.2 produced PPI. So producer price index PPI, at least months over months, come in a little bit better than expected. Core, I think, in line or slightly worse. But and then CPI data yesterday came in a little bit hotter than expected, both on a year over year and months over months. So what's next? Next is earnings season, right? JP Morgan, Wells Fargo announcing earnings. As a result of this, let's look at some of the data, macroeconomic data, and just see where we are. So definitely strong move on better than expected, softer months over months PPI data. Everybody was concerned. A lot of indexes were sitting on the 50-day moving average. If you follow my live trading room, I did say, 70% of the time 50-day moving average holds. But, if the news are worse than expected, then it doesn't. I think if PPI came in worse than expected, would have broke the 50-day moving average. Since it came in better than expected, we're back. Does it mean green light and, there's no risk on trade? I'm not sure, right? Because the 10-year yield is still above this main breakout 4.5. I think as long as we're staying above 4.5 on 10-year yield, as long as the dollar above 105 and continues to grind higher, there is risk in the market, right? And high yield is also not rebounding and actually broke through the key support level, right? Basically year-to-date lows, 76.5. We're trading right at that level, a little bit below. Right? This is what, 76.55, and we were 76.20. So, and on the above average volume. So if we are unable to get back to this range-bound trading, I think then there is still risk in the market. VIX did drop. It's not back to 12. But it is back to 15. We went from 17 back to 15. So that's good in terms of volatility. And you have a strong price action in QQQ, semiconductors, spiders, small cap stocks, all leading the charge except the value stocks. And NVIDIA, now I think where NVIDIA is going is where the market is going. That's kind of what I said, been saying for the past couple of weeks. And you can see NVIDIA successfully held its 50-day moving average, bouncing back, trading in the range, and that's a big win for the bulls. So I would still be cautiously optimistic short term, and continue to look at the interest rates, right? But 4.6, 4.57, I think the rates are elevated, especially if they're going to continue to rise, right? Because in terms of inflation data, the next unknown is Powell's reaction to the CPI and PPI data, right? We had 3 months where it's hotter than expected, where this is not probably an anomaly. This is just the fact that inflation is here to stay longer. Now, how will Powell and Fed committee react to that? Will they say the same thing, where we're going to cut interest rates 3 times, and we're going to find the balance between inflation versus potentially increase in unemployment, or are they going to change their rhetoric? If they're not going to change their rhetoric, market is going to continue to rally. If they do change the rhetoric, depending on exactly what they say, is it 2 interest rate cuts? Is it 1 interest rate cut? Is it in June or is it in September? I mean, that will definitely impact the market. But until then, that's end of April. So we do have, I think, 2 more weeks till then of earnings, right? We will have majority of earnings announcement by that time. I think the next catalyst is the earnings, right? The idea that we're in soft landing and JP Morgan, Wells Fargo are printing money, and that then they're going to do well, right? They're going to do well. So you can see Wells Fargo is consolidating, did broke through the support, testing 50-day moving average. JP Morgan is also consolidating, didn't really go anywhere, but briefly broke through the low and now potentially targeting 50-day moving average around 185, 180. Okay. In terms of commodities, right, late cycle, late cycle value trades such as commodities. You can see XLE started consolidating, but still kind of a vertical move to the upside. You can see it in XLE. You can see it in aluminum prices. You can see it in copper prices and gold and silver. So, I mean, consolidation is good and healthy. This is good. And I think as long as the inflation is here for longer, that would be the green light for silver, commodities, energy names. And I would be a buyer until pullbacks. And our models, if you do look at the yellow tunnel, almost on daily basis, does show commodities as the signals. Right, so I'm long XLE, and today was Divan Energy. So on daily basis, we have signals that are coming out in energy or commodity space. So I would be a buyer into pullbacks. Any questions? Bob still finishing Texas. Tax season, yeah, April 11th. We have 4 more days. All right. Any questions on Tradier Hub? No questions. We're good. Yeah, and you can always, look at AI analysis. Type in XLE, AI analyze, and you'll see, we actually see an uptrend for the next months. We could get to 100 or 105 level on XLE. You can type in any symbols to analyze. All right, so that's aggressive power trader. In terms of earnings power trader, right? Earnings season, we have Citigroup, Delta Airline, we did the earnings, JP Morgan, and Wells Fargo. So let's look at the positioning, where the biggest position. And in terms of JP Morgan, again, one contract of JP Morgan at $200, you're managing $20,000. If the average account is $10,000, it might be too much exposure for a $10,000 account, right? Citigroup, $60, or Wells Fargo is a much better, positioning. So let's look at Wells Fargo. So you can see a very big position at 60. So I'm gravitating toward this as an example. So you have 50. Relatively small position. No, I mean, smaller than calls. So there's a lot more demand for the calls, selling calls. There's some hedging at the 55 level. So implying $3.50 move, right? So 55, or actually here 52.5. But on the upside, implying, right, basically $60. So that's $3 move. And Wells Fargo can move 6% to the upside or to the downside. So let's structure these trades. I did my homework. So 60, based on the implied volatility, right? We can go to our friends at Tradier and do estimated move analysis. So we know how people are positioning, very large positioning, people selling 60 calls, basically saying we will not break 60 level. And if you look at the estimated move analysis, 60, we're trading at what? 57. So trading $57 plus dollar is 2, 2.5, 3.2. So based on implied volatility, 3.2%, $3.2. That would be 2 standard deviation or 1.6. So 3.2, that will take us to close to 60 level, and minus 3.2 will get us close to the 53 level, 52, 53 level. There's not a lot of positioning. Most positioning is at 55, but there is some positioning at 53. But the most position is 55. And it looks like it's pretty well supported. So let's look at this trade. Let me go to my account. So we'll do it as a spread. So first, let's do bullish spread, right? So I think it can get to 60, but not beyond that. That will gravitate towards 60. So then we can do a spread, right? Vertical spread. Let's do $2 difference. So if I buy 58.60 spread, it costs 45 cents. Which is a little bit expensive. So let's do 59.61. 58 is 2. So 59.61, 28 cents. So 59.61, basically, where it's not going to stay at 60, it's going to gravitate toward 60 level, but not go beyond that. So let's buy that for 27 cents. Or 28 cents. Okay. So Wells Fargo. So I bought for 28 cents, right? Bought 59 call, bought 61 call. So spending, I mean, it's Wells Fargo has been consolidating, right? It's trading at 57 level. 57, I spent 28 cents. That's about 0.5%, right? 0.5%. So I can leave it like that, right? If, I concerned that it will go beyond 60. If I don't, then I can reduce my cost basis by legging into basically butterfly, right? I can do the same thing, $2, and sell 60. So 59.61, selling 61.63 for 7 cents. Let's try 7 cents. That didn't work. We'll do 6. So now instead of spending 28 cents, I'm spending 22 cents. So maybe 30 basis points. So at this point, it's a butterfly, right? And the most I'm risking is 22 cents, right? So I'm risking 22 cents. And the potential profit, if it gets to the middle strike, if it does get to 61, then the potential profit is $1.80, right? So I'm risking 20 cents to make $1.80, right? Or 22 cents, $1.78. So this is where you can risk kind of a small percentage risk, but if, through this consolidation, we have a next leg up in the market, which if we are in a soft landing and banks do well, then that would be the trade. But people are nervous, right? Inflation is higher for longer. Yield curve is flattening, right? Instead of steepening, it's flattening. And interest rates could stay for longer, right? And high interest rate is not good for Wells Fargo. And maybe default rates of credit card defaults can go up, or loan defaults can go up in Wells Fargo. And we could be back to the lower range. And I do not know, I don't know which way it's going to go. So since I don't know, I would do the same thing on put spread. If I have an opinion, right, then maybe I'll just do call spread, or maybe invest more in calls, less in puts. But I don't know. My bias is to the upside. I think it will go higher, banks, but I've said that before, and it would go lower. So okay, so let's see what I did in Wells Fargo puts. Okay, so 54, 53 puts. So I did do $1 spread because I don't want to spend as much money, and I think, well, let's see. So Wells Fargo to the downside. So 60, right? What strike did we do? 61. So 61, it would have to move basically $4. $4 on the downside, 52.5. So let's see. Do $2 spread vertical. Do 54, 53. If I do $2. Already at 55. So let's do 54, 55, 53. A lot less. Okay, so let's do 55, 53. Implied volatility, so implies $3 move. I can do 54. Okay, let's do less. 54, 52. 50-day minus the 55. We'll do 54, 52. We'll just do a debit spread. Debit spread in case we have large move to the upside, 14 cents. Okay. So once again, implied volatility, we have $1.30. Two standard deviation would be 213, 73, 3.5, right? 2.5, 3.5. So if it moves $3.5, which would take you to 53, that's two standard deviation move. Then the spread would be profitable. Or if it moves 3.5 higher, right, from 57 to 60.5, 61, 63. Sorry, I did 59.61. Or if it moves $3 to the upside, 57 plus 360, 60, then this would be also a profitable trade. So at this point, I'm risking 30 cents to potentially make $1.70, right? 30 cents. But it has to move two standard deviation, right? Because the implied move is only half of that, right? The implied move that it's going to move only 3%. So as long as it moves more than 3% and gets close to these strikes, then this would be a profitable strategy. But it does have to move. Any questions on? Got it, Bob. Any questions on the Wells Fargo? Right, you can see the same trades on earnings power trader. Okay, let me review my. And so, if you do have a larger portfolio, let's talk about JP Morgan. We can look at how JP Morgan position. JP Morgan moves around similar to Wells Fargo and actually Citigroup. They're all kind of have similar expectation. JP Morgan, there is really no consensus, right? You can kind of see it; it's all over the place. But you do have a large positioning at 210, right? This is April 19. 210 implying $14 move to the upside. In terms of hedging, there is a lot of hedging at 190. Sorry, 190 is too close. 180. Sorry, one biggest is the blue line is 180. All right, so let's look. So I mean, potentially you can sell 182.5 put or 180 put. There is something you can do. So pretty well positioned at 180. And to the upside. So 210. So those are the strikes for JP Morgan. The middle strike for JP Morgan 207.5 is trading at 35 cents. And the put 182.5 put is trading at 22 cents. So a little bit less that, ideally, but that's kind of where it's trading. And then Wells Fargo. Three put. Let's look at Wells Fargo again. Pretty well hedged at 55. 55. So let's see. So Wells Fargo 60. I'm just trying to look. $60. $0.60. So 60 strike. So I'm buying 58 put and 60, right? Then I need to hedge the 60 strike in case it has a very strong earnings. Okay, so that's Wells Fargo. Let me know if you guys have any questions on Wells Fargo or JP Morgan. All right, Citigroup. Let's look at Citigroup. How the Citigroup is positioning. So same thing, Citigroup, they're all kind of implying the same move. 2 standard deviation would be around 6%. Very large Vena in Citigroup at the 65 strike, right? And it was 64. 64/65. So Citigroup 64 call is trading at 18 cents actually. So you can sell 65 call for 9 cents, with the assumption that it's not going to break through 65. So it looks like there's a lot of demand for 64, 65 calls selling. So the assumption that it's not going to go beyond 65, which would be 6-7% move. So that's Citigroup. So let me just review the positions. Again, butterfly, or you can do ratio spreads. Right. One way to do it, you can buy, let's say, 62 call and sell 264 calls, right? Or buy 162 and sell 664 calls. Something like that. And Citigroup, in terms of the downside risk, right? So the upside is 456. So the red April 12th is around 59. That's too close. 58. So here, 55 put is well positioned. So 56 put, that's lost almost all the money. Trading at $60. So 57. Sounds $55. All right, so that's all with Citigroup. And that's it. Okay. Any questions on Tradier Hub? No. Yellow Tunnel, Trade Spoon. Okay. So let's review the other positions now that we got the Wells Fargo trade place. What about the rest of the positions? So I'm out of Delta Airline. We talked about that. That was still long gold. Gold continues to outperform, right? Together with energy, based on the signals that we continue to get, and gold, I think, almost new all-time high. So that's kind of also needs to be resolved, right? Why is gold continues to go higher and QQQ is all-time high, right? But on one hand, you have sticker inflation. That's why gold is up. But you have low unemployment and people are spending money. So that's why technology is going up. Okay. We'll see how long that trend can stay like that. Silver, I'm long silver as well. It's also close to multi-year high. NVO, so still trading around NVO position. NVO has trying to regain 50-day moving average. It traded below that, above it, kind of trading, trying to regain this downtrend, closed this big gap, kind of trading at the same level. So no changes in NVO. Let me send the signal. So the earnings power trader. Okay, that's Wells Fargo. This is earnings in play. Play 55 put. Is it stale quote or does the play actually hold 5 cents? Oh, 55 put is still trading at 5 cents. But that's next right. Okay, we'll wait. It's fine. Still long Qualcomm. Looks like Qualcomm is coming back together with the other semiconductors today. So nice rebound on Qualcomm. It's again retesting all-time high. I'm long Qualcomm. I do have QQQ put spread. Now it's losing money. Let's see. Let's see if I want to close it. I guess I can wait. It's May. If it breaks above this level, then I would exit. Right? If it makes new all-time highs, and doesn't make sense. I mean, right now I think the risk in the market are obviously earnings that could be worse than expected. I'm not sure if that's going to be the case. But yield has not dropped, right? And VIX is still at 15, 10-year yield is still going higher, dollar is going higher, and high yield also did not rebound. So all of these trends have to reverse. Because if the high yield continues to drop and 10-year continues to go higher and dollar continues to go higher, at some point QQQ will sell off, right? There's only so much that divergence can happen. I mean, short-term QQQ was oversold at 50-day moving average, but this is all, especially on above average volume, that's a sign of a concern at least. So I'm going to keep the QQQ put spread as a hedge. We talked about silver position and XLF. XLE and XLF. So I'm long XLE, right? I think XLE continues to go higher. And I'm long XLF. I think earnings season in banks should be better than expected. The only caveat are obviously interest rates, right? If interest rates goes to 5%, that will adversely affect the banks. And they are sitting at the 50-day moving average. So between earnings and interest rates, it's kind of, it could go both ways. For now, 50-day moving average held, and all eyes on JP Morgan and Wells Fargo and Citigroup earnings tomorrow. Questions? So STT is also announcing earnings. This is a regional bank. It's not very liquid, so you have to be careful. But State Street is also, it's investment banking. We had news in Morgan Stanley. Morgan Stanley is down. But there is a large position in April, which is red line at 65. And there is a large position at 80 call. 80 call. Any questions? Okay, any questions? John, cool. Mafuz, Patrick, Ricardo, Michael, Steve. Looks like just gold got filled. Right, so gold got filled. Let's see, I'm out of gold now. Do I still have a small position left? I still have a gold small position left. Okay, so let's look at gold. What's the next level on gold in terms of supply and demand? Let's go into May. Yeah, gold is getting a lot of boost, 230. Okay. So next, so let's try to close at 228, another 4%. Do a little bit before that, right? This is what, 230, 228. So I'll be buying pullbacks on gold. So the rest of the position I would close at 228. Or if it pulls back, then it would be a buyer to pull back. But it looks like gold continues to make new highs. Yeah, looks like we have another new high in gold miners, and silver is at 26. And what's the position in silver? It's the next level of demand in silver. $30. So a lot of positioning at 30 in silver by May. Okay. Silver 30 by May sounds good to me. How's our silver position actually looks? So it's up. So the long call is up about 15 cents, 30%. The short one is going against me about 7 cents. But it continues to go in the right direction, so that's good. So we do have silver and gold. Send the alert. Who has gold? I think it's Dynamic Power Trader and Profit Accelerator. Dynamic Power Trader, gold. Yep, and Profit Accelerator is gold. Gold, yep. Power Trader, Profit Accelerator Trader. Please review the wrap for trades on GLD and stuff in today. Okay. Any questions? Right, 251. So it looks like we're closing towards the session high on QQQ, spiders, and IWM. Gold, silver is also outperforming. NVIDIA, strong rebound in NVIDIA and semiconductors. So that's good. Ten-year yield continues to grind higher. QQQ, we talked about. Spiders, we talked about. Energy pullback, gold rally, Japan rally. JD's up, ExxonMobil slightly down. Small caps are up, semis are up, NVO flat, XLE slightly down. Silver is up. In terms of Magnificent 7, let's look at Magnificent 7. Let's see, so L, energy is down. Biotech is up, silver, gold, platinum is up. Materials, aluminum, mixed results. Materials are underperforming today. Let's see, Apple is up, right? Strong price action in Apple. Up 4.5%. Ten minutes ago, sector update. Okay, but Apple is up 4.5% above average volume, so maybe you have a well-defined stop level 167, and potentially next level is over 180, right? If you look at Apple. So 165 is pretty well positioned, and then 180. So up until 180, you don't have any overhead resistance so much. So it could get to 180, right? It could get to 180. Google makes all-time highs, up 2%, makes new highs. Tesla is up, rebounding. I think Microsoft is probably close to all-time high. So Tesla is underperforming, still weak. Let's see, Microsoft. Microsoft is at the upper range of where it's been consolidating, but I think Amazon is new high. Yeah, Amazon is breaking out new highs. Netflix is Upper range, Meta, upper range. So you have a big price action in Morgan Stanley down 5%. And they're being audited for some of their wealth management practices. So you have pretty sharp drop before the earnings, 5%. Delta Airline looks like resume its upward momentum after the earnings. They had better than expected earnings. So it's been trading sideways. Rivian is down today 6%. Bob CCJ is doing pretty good. CCJ has found its bullish momentum. After visiting 200-day moving average, it's back to all-time highs. All right. Any questions? All right. If there are no questions, then I will see you guys tomorrow, morning bell. We do have a strategy around, and we have a webinar on Yellow Tunnel at 7 p.m. If you guys are available, please join me. It's at 7 p.m. Central today. If not, then I will see you at the strategy roundtable. And thank you.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.